Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you lose all your money for sure. And with that out of the way, we're going to speak today about ADMA Biologics, ticker ADMA, market cap under 5 billion, and reporting earnings on the 9th of May. If we zoom out, you'll see that this company has grown massively from low single-digit price up until 2023 to a pretty spectacular growth over the 2024 period. And yes, after the election, it dropped a bit, but it's recovered some of that lost ground. Why is that? Well, this company has emerged as a strong competitor in plasma market by leveraging a specialized niche-focused strategy that differentiated from large players. So it is competing with names such as Grifols, AbbVie, PTC, Biogen, Twist Bioscience. So not all of them, but some of the main competitors like Takeda are actually very established and solid names that have been around for quite a while. So why have these guys risen so much? Well, they are focusing on high demand underserved markets, and that allows them to avoid competition. Specifically, they target the immune deficient population, which has become an unfortunate reality after the pandemic. Then they're also vertically integrating the plasma collection. So they have around 10 centers of their own where they collect via donors the plasma that is required to produce and manufacture these products for the patients. That has allowed them to retain control and become less supply dependent. And at the same time, they have built partnerships with institutions like Amerisource and Cardinal Health to enhance their distribution to targeted patient populations. Um, Additionally, management has mentioned several times the increased market demand for the product and the fact that if those trends continue, they're gonna be in a very, very good position to continue generating revenue and earnings growth. So at the moment, they're riding a wave of demand driven by rising immune disorders, pediatric care needs, post-pandemic health priorities, and hyperimmune therapy. So this, as you can probably notice from the chart here, has completely changed the business because it has enabled them to sell much higher margin products. So that's why the revenue and earnings are growing so fast. They're selling a lot more, but they are also selling much more profitable products. Now, in terms of where we are at the moment, I thought this would be a very interesting name to look at because the tariffs is not something that is going to impact them too much. And that can probably be evidenced by the uptick that the company experienced over the month of March. When most of the market was collapsing, the stock went from 15 to 19. So it's up 25% in a month. And in a current environment like this, when there's a lot of uncertainty, I think this could be and will continue to be a great refuge for investors that are seeking to avoid the uncertainty of the trade war. Additionally, there are strong underlying fundamentals of the business are driving greater valuation. Stock is currently trading at a premium to the sector. And I think that there are going to be catalysts on the line that are going to continue driving that valuation as well as earnings growth. So one of them is the production yield enhancement, which is a program that they have announced. They have already submitted their application for the FDA, and according to management view, it will provide upside potential to the company. So they believe that they can get an additional 20% production from the same quantity of starting plasma, and that will result in outsized EBITDA contributions. So we will see that happening in mid 2025, but it represents a very transformative catalyst that we could see, say, in 2-3 months' time down the line. Additionally, in previous quarters, the company has also announced a program called SG-001, a strep pneumonia, which they believe could contribute between 3 and 500 million in high margin annual revenue if approved. Now, the timeline for that is not known at this stage, but it certainly creates further catalyst down the line if we were to look past that mark of May 2025 to generate further upside. Some other catalysts that we could see as well would be the addition of new partnerships coming online. Let's not forget, this company has done a pretty good job in terms of bringing new joiners on board in a short space of time. Let's not forget that they have been around for quite some time, but they are now onboarding these customers because that, those partners because of that enhanced value proposition. So we could see more partnerships enabling them to put market out there. In terms of risks, the obvious one and closest in terms of timing would be the lack of approval from the FDA. That's something that we will certainly learn sooner rather than later. But of course, they are subjected as well to supply challenges on plasma, their ability to retain and keep making come back the donors that go to the centers to donate, and also any kind of issues with their center network. At the moment, they have 10. So if one of those might be disrupted by any reason, that would be somewhere around a 10% supply disruption, which is significant. Now, my price target for this stock in the near term is 25. So the current price does not allow me for a good entry point at this level. It would have been a pretty good entry point in late February, but for the time being, it's one that I'm going to keep on my watch list with the aim of reaching the $25 mark and potentially 30 a little bit down the line, say in late 2025. Hope you enjoyed the video. See you soon.